All right, what is going on, future me? Hope all is well. As with every week, I want to go through my plan for this coming week and just kind of jump straight into it. We do have the daily for the dollar pulled up, the DXY, and so just kind of again, just to jump straight into it, we did see the expected dollar downside, the continued downside based off of the new news catalyst and everything else that we had saw that we were presented with last week. Going into this coming week, there are a couple of different catalysts as well. We're pretty much, all the focus is on the dollar this week as far as news is concerned. We have obviously NFP, we have pre-NFP on Wednesday, we have, manufacturing PMI, services PMI, we have JOLTS, we have unemployment claims this week. So there's definitely a ton of different drivers that can act as catalysts. I feel like I say the same phrase every week, but they can act as catalysts for dollar volatility. Obviously, we've been trending to the downside, but, obviously with the PCE numbers coming in and pumping the dollar just a little bit, the way that the chart is looking structurally, right, it does look like the dollar is primed for a retrace. And for that particular retrace, I'm looking at two areas. That first being that 103 sort of 60 area in confluence with this 382, and then outside of that we do have the 104.50 105 sort of bounce or break liquidity zone up here in confluence with the 618. So there are two areas where price could potentially retrace. I do not, however, want to rule out the fact that we are still trending downward. We're still respecting this channel as it stands, although it does look like it's getting ready to break any minute now. We still can make that move to that range low around 101.22 sort of area. Overall, that is the sort of longer term target, but I don't want to ignore the fact that we do have to retrace some of the downside that we are seeing, right? Like it's only natural that we see retest of previous levels of structure, especially after breaking down and out from them. So of course, once again, I am expecting a retest and a retrace into the 103s or potentially as high as the 104.50s, 105 sort of areas. And then when I line that up with gold, obviously I'll cover gold here shortly, but we are primed for a retrace on gold as well after all the upside we've seen. And as I get into the different charts and the analysis and everything else, it'll make a ton more sense. And so with that, right, that brings me into the weekly chart for the dollar. And as I've mentioned, like in literally every pre-market plan since this engulfing candle in beginning of March, we are looking pretty weak as far as the dollar is concerned. When we see rejections like this, obviously pointing out this level of structure is a very strong one. This is also the 105 sort of 104.50 bouncer break level, also acting in confluence with this 382 fib. So there's no surprise why we would see price reacting like this to this level, or even coming back and retesting it before further downside. And so that leads me into the most recent weekly candle close, right? Not super definitive. It was a bearish candle, but nothing super definitive as far as momentum is concerned, right? Like we're still, we're wicking into these levels around the 101s and everything else, and we're still, we're not making a definitive break down from 103, although these, last three candles are bearish, and you can kind of almost call them engulfing, except for kind of this one, I guess, just because of the wick. It's not definitive to me to say at least we're going to, 100% see further downside on the dollar, especially when we see the potential retracements that are happening on the daily into the coming weeks and everything else, right? We could also look at it from the perspective of like, okay, awesome, we had this low come in around January 23, and now we have kind of a higher low. No, like this is a very nuanced microstructure sort of perspective to have, but it is still a valid one until we get a solid body close, obviously below these lows around 101 sort of 80 area. Any wicks, any lower wick creation and bounces back up, that can kind of qualify as a microstructure sort of higher low into that 105, 106 bounce or break area before further downside, right? And that's kind of the perspective and the lens that I'm looking at it through. Just because, once again, I don't want to, just because we broke down from 103, I don't want to say, like we're going straight to 101, we're going straight to 99 type of thing. It's just not the case. Once again, although we are moving to the downside, the candles are telling me a little bit of a different story. So again, just leading into my overarching point around the daily, I am expecting a small retrace into the coming week, or maybe even the coming weeks, depending on how long it takes to play out, before seeing further downside on the dollar. Monthly candle close for the dollar here as well. Nothing super definitive. I would say once again, I feel like I've been saying this most of the month. I am looking more towards the weekly and daily time frames, just to give me a bit more context and kind of key me into what could be happening into the coming weeks rather than looking at it from like a super macro perspective on the monthly, just because again we don't have a ton of data here, right? Like this is literally just a break and retest of 103, so you would probably say that there would be continued upside, right? But when we look at it on the weekly, it's saying something else, and when we look at it on the daily, it's saying something a little bit different as well. So once again, I will be looking to these two charts more so than the monthly to see where I should be positioning myself in the market. So once again, just to kind of go back into my summary of the dollar, I am expecting a small retracement into this coming week, or maybe it doesn't happen this week, but I am expecting a small retracement overall. Especially when I look at it on the daily, it is looking prime for a retracement and a channel break here, potentially into 103.50 or higher than that, around 104.50, 105 sort of area, before seeing further downside. We are still bearish as far as the dollar is concerned, so if the dollar does pump into these zones, I'm not going to jump to conclusions or jump the gun or anything else. It's not until we break above 105 and retest it with stability that I'll be obviously, changing my tone around the dollar. So I hope that made sense. Future me, that leads me into JPYBasket. Something very interesting on JPYBasket here, as we can currently see, right? I don't think I even have to point it out, but we reclaimed this range around 8,000, between 8,050 and the 8450 sort of area. And so with that, I'm of the same sentiment. Every time we're within a range, we are at the mercy of the range, and I'll be playing these indexes level to level. And when I look at it from this perspective, right, the daily time frame perspective on JPYBasket, we have a swing low to a swing high fib. We also have a liquidity zone at 8,000 sort of 50 area. We have a very clean wick and bounce from that area as well, right? So obviously we have the 618 acting in confluence with this level of support, and now price action is also respecting this area and this fib as well, wicking into it like it did, right? And so when I see a wick like this, I am considering and expecting further upside for the yen, and at the very least continuing to range within these two levels at 84.50 and 8,000. And it does, for me at least, it does make sense. And I'll get into this as I continue to cover everything, everything else, all the other charts and everything else. It does make sense to see a move up from this range low on the yen, especially seeing the way that GJ is looking to retrace into the coming weeks, and I'll cover that when I get into those charts. But once again, I am expecting a move back into, if it's not these wicks to grab liquidity, then all the way into the range high around 84.50 sort of area. And so once again, I'm going to be wanting to be very observant of that. Not, obviously not jumping the gun until there is a break below the 8,000 level. But until then, I'm just giving, I'm taking what the chart is giving me, in that we're bouncing from the 8,000 level, also acting in confluence with the 618 swing low to swing high. Next level from there, just from a technical perspective, would be the range high 8,400 once again to retest it, or maybe a little bit lower than that, around like 8,300, 8,350 sort of area. Regardless, I am still expecting a bounce. Looking at it on the weekly, right? It kind of becomes hard to say that I would be wanting to expect a bounce, especially with the way that we just rejected the range high. This is something that I had covered in previous pre-market plans. Obviously, when we see price moving into a range high, resistance is always going to be resistance, and I did expect a rejection from that. We did see that, which was great. And now, where we lie on the chart, where do we go now? Where do we go next? We have a very clean retest of the weekly range mid. Obviously, this is the 8,000 level, so I would want to see definitive weakness below this to really call it a break, and to really call it a continued play to the downside. Because once again, the same way resistance is still resistance, support is still support, and I will treat it as such. Although it does look like we're getting knocked back, and although it does look like we're having a little double top sort of action going on here, I'm not going to be jumping to conclusions until we get a definitive break to the downside. Because once again, the daily is looking really good and primed for a potential bounce, especially toward the end of the week here. 618, range low support there as well. But on the weekly, obviously the most recent weekly candle close does not look good whatsoever. So once again, going just based off of what the chart is telling me on the daily, We are finding support at 8,000. We found support at 8,000 many times in the past, and we have ranged between 8,000 and 8,450 for many days, many weeks in a row. And so I would be wrong to consider anything outside of that until we get a definitive break below 8,000. If we get a definitive break below 8,000, obviously I'm going to be targeting 75.15 on JPYBasket. We did not get that break just yet. And so I will be expecting the bounce to the range high until then. Obviously, I'm going to be keeping an eye on this particular index throughout the coming week. But once again, that's kind of my sentiment overall. I am expecting the bounce based on the analysis on the daily, although the weekly does look extremely bearish after the range high retest and rejection. It's not until we get the definitive break below 8,000 that I can obviously confirm the move to the downside into potentially 7,500 and treat it as such. I hope that makes sense. Monthly looks horrible, right? Not only do we have this ascending channel being respected, I can make this a little bit cleaner here as well now. Boom. Beautiful. Right there. Bomb. And so again, with that, it does look like structure on a very high time frame macro perspective is being respected. Obviously, we have the swing high to swing low off of the thrust candle, 618 rejection, also acting in confluence with this level of structure, this descending channel here as well. And so with that, right, from a macro perspective, you would expect further downside on the yen. Weekly also supports this thesis. The only thing I'm waiting to match up with that is the daily. The daily is still looking like it wants to bounce and potentially retrace into previous highs before it makes a move lower, if that's what's in the cards. Once again, I'll be wanting to lean more towards the daily and weekly time frame, similar to the DXY, to really kind of guide me in positioning and what my overall sentiment will be toward this particular index. So once again, I need definitive weakness below 8,000 to really start considering the yen to, I would need to see a reclaim below 8,000 to consider the yen confirming the bearish move to the downside. Although it looks definitive on the weekly and monthly, of course, I would like the additional confirmation on the daily, just as an added touch. Especially with the way the yen is looking, I do not want to count out the fact that we could be seeing a retracement back to the upside before a further move to the downside. And I'll cover that as I get into GJ. Hope that makes sense. And last but not least, we'll cover the pound. Also, this kind of backs up my or actually, I'll scratch that. As far as the pound is concerned, right? This is something that I covered in previous pre-market plans. We did get a definitive move to the upside, which is awesome. We are starting to see, we're starting to see a little bit more momentum to the upside. But, cause for concern here is obviously this triple top, this third high that we've made. These are three equal highs that we have not broken, right? Like literally the most recent daily candle close as well rejected this range high. So of course, with rejection and playing these things level to level, I would expect downside into 122. This also adds a ton of context when we look at the yen, potentially wanting to bounce off of that level around 8,000, and then obviously acting in confluence with the 618. Seeing these two charts decoupled is what I love to see, and this also points out that we have a very high likelihood of seeing GJ weakness, just because again the yen is strengthening while the pound is finding resistance and potentially moving to the downside. At the very least, we'd be seeing 122, and at maximum, I would obviously say 118. Or maybe we're getting a break retest of 122 before a move higher. Definitively, right? Like we'll just have to wait and see how that plays out as we approach 122. One thing, I'm not gonna say that I know just because I don't have a crystal ball, but one thing I'm very much expecting is that bounce from 124 back into 122 at some point throughout this week. And so again, that does add a bit more conviction for GJ shorts back into 162, and I'll get into that in a second here, just because once again we are seeing a bullish retracement on the yen, bouncing from that 8,000 level and potentially higher, and now we're seeing a knockback on the pound around 124 back into 122 and lower than that potentially. So I hope that made sense. Pound weakness and yen strength equals GJ going down, and then obviously the opposite of that is strength on GJ. So I hope that makes sense. We'll cover the weekly really quick here, then the monthly candle close. Still pretty much in the same spot, honestly. I mean, although we are finding stability around 118 and we're bouncing from these levels into the range highs and everything else, this is still a high time frame 618, right? Like, unless we definitively break 124, break retest above that, above these levels, I'm not really jumping for joy as far as like pound strength is concerned. We're still very much at the mercy of the range, as we can see on the daily. And I'm going to be treating it as such until we get big moves to the upside, breaks, retest of these ranges and everything else. Because this was an inverted head and shoulders that should have broken weeks ago, months ago, and has not. We have been continuing to range and consolidate between these levels at 118 and like 124 sort of area. And so once again, it's nothing definitive for me, but what adds, a bit more conviction for potential GBP upside is the monthly candle close, right? This is something I've covered time and time again on this channel. Just again, this level of structure around 124 sort of area, we are still trying to battle and figure out what side we're gonna kind of land on. I've not seen an engulfing candle or a candle with strength print above the 124 sort of area. Until I do see that, I can't really see this upside scenario happening just yet, because we can very much be creating a rounded top and moving to the downside thereafter. I would like to see, obviously, price poke its head above this level, similar to what we're seeing back here, rather than just closing within the zone itself, to really see or expect further upside on the pound. Hope that makes sense. Once again, just to kind of sum it, we are moving into a level of resistance, potential triple top here. I would not be surprised if this is a bullish break and retest play. We would have to see 122 regardless, right? Outside of that, if we're going to see continued downside, right? If this is a rejection of 124, we're still going to see 122. So for me, in my expectations and what I'm thinking, and what based on what the chart is telling me, we're going to be seeing 122 regardless of whether we're going up or down. So that adds a ton of conviction for GJ shorts just in the short term. Once again, because I am expecting a bounce on the yen, knockback, at least in the short term. It could potentially turn into a long-term sort of thing on the pound into 122. So hope that made sense. That leads me into the pairs I will be trading for this coming week. We can start with GJ. We'll start on the let's look at the monthly first. Monthly, kind of I mean, I don't want to call this an indecision candle, more of like a doji, long way to the downside. I mean, we still have this sort of monthly cup and handle at play, right? Like, we're kind of at the mercy of the range, right? Like, to be completely honest, very similar to holy shit, I can't speak. Very similar to the pound and the yen. I'm going to be leaning more towards the daily and weekly for guidance as to where I want to be positioning myself within the market. As we can currently see on the monthly, we are literally just ranged between 168 and 156. We're just consolidating between these two levels. The monthly cup and handle is still valid, as we can currently see, as long as we're ranging within these two levels at 168 and 156. A break above or below will either confirm or invalidate that cup and handle for me. And just outside of that, right, like, not considering what's on the left of the chart, right, because this is still developing. These are still potential higher highs and higher lows to reclaim and get back into these levels around 170, 188, and everything else. So I don't want to, and I'll be on the other side of that. This could be a lower high here as well, right? So I'm literally just waiting for the range to finish developing and for price on the monthly at least to finally break with strength in either direction. So when I look at it on the weekly, right, once again the range becomes even more so well defined. Let me it looks like I have some drawings on here. The range becomes even more well defined here as well. And a couple different takeaways that I want to point out, right? A couple things. This could still be bullish, one. But also, this could still be bearish. That's probably not the answer anyone wants to hear. They want to, everyone wants fucking targets, entry, TP, stop loss, and everything else. But unfortunately, it's not how this works. And so with that, right, As we're continuing to range between these two levels, 157 and 168, there are a couple of different takeaways. One, we did get a big rejection back here a couple months ago from 168, definitive weakness, and then thereafter we did get a big retest and retracement on 166, also in confluence with the 618, knocking us back into the range lower one around 158, 157 sort of area. I've mentioned time and time again that I am bullish above 162, this sort of weekly range mid area, but we are still, resistance is still resistance. With that, being of the sentiment that I am bullish above 162, I also want to be cognizant of the fact that we're going to have to come back and retest that level of 162 if we are going to continue, moving to the upside. Although we did get rejected from the 166 sort of area, I don't want to ignore the fact that this is still a bullish engulfing candle and that we can continue to see upside. This is a range, right? So, we tagged the range high, I'm going to expect the range low. We tagged the range low, I'm going to expect the range high. That's just how these things sort of work. And then obviously with, in the middle of that, the range mid there as well, acting as a pit stop. So when we see big pushes like this, it's only obviously big pushes and then wicks into resistance. It's only right to expect a retest of the structure we just previously broke out of before either seeing a reclaim to the downside or a bounce and a break retest back to the upside. So that's exactly what I'm looking for, right? We got the big break above the 162 sort of weekly range mid area. I am now expecting a retest of that 162 range mid sort of area or a break back below it and reclaim to the downside. Not only that, we also have something very familiar, something that we've seen many, many times. We have a very fickle and, a very fickle and very, familiar. It's been touched many times, this trend line, right? And typically what happens with these trend lines is either we get the ascending triangle to the upside or we get the squeeze, rejection, and push lower. And on a very small, on a smaller scale, I'm starting to see the same thing start to develop on the weekly here as well, right? We obviously have the first rejection to the 618, second rejection to the 618, and maybe we continue to squeeze, right? Maybe we continue to squeeze back into 168 before that definitive move to the downside. But in order for us to get there, there are going to be multiple retracements. There are going to be multiple tests of different levels of structure. And again, I just want to remain cognizant of that. Look at how many times we retested the range mid, back here after pushing up to the range high. And so once again, I'm going to be playing it as such, retest of the range mid before a move higher or a reclaim lower. And again, fickle trend line, it just adds my conviction to that particular play. Either once again, we get the push into the level of resistance here, push to the upside ascending triangle, or we get the squeeze and rejection at resistance. Going into the daily definitely adds a bit more context, makes a ton more sense here as well on what I'm wanting to do. And so I just mentioned on the weekly that I'm going to be wanting to see the range mid retest on the weekly, that 162 retest on the weekly, or the reclaim below that to make my decision in where I want to position in the market. And when we look on the daily, again, adds some more context. And I want to start with looking left, right? We have the higher high, higher low structure forming and then turning into a higher, or rather a lower low and lower high structure thereafter, right? We make a big high, price starts to consolidate, and we're like, okay, awesome. We're starting to shift back into a bearish structure. That's exactly what we did, right? Once again, we get the other side of that here. We start to shift from lower lows and lower highs to higher highs and higher lows, right? So we get a big push. We get that big rejection at 166, and now we're starting all over again, it seems, right? We have a higher or lower high, lower low. Now we have a lower high, lower low once again. Now we have a new high, higher low, higher high, right? After this last higher high at 166, we start to see structure starting to shift once again, right? We have a high. Now we have a low. I can delete this one, honestly. We have a high. We have a low. We have a lower high. lower low, and now it resets all over again. Now we have a new high. Are you guys following here? Future me, I hope this makes sense to you. Once again, just to back up, we have a lower high, lower low, lower high, lower low. Now we have a new high, higher low, higher high. And then it shifts once again. We have the high now, a low, lower high, lower low, and it shifts again all over again. A new high. This new high has surpassed the previous lower high. So it's a brand new shift in structure. What does that mean, right? We are looking for the higher low. Where could that possibly be? Well, if we look again left, we have a very well-defined range mid around 162. This is also the level of structure we have tested as resistance and support multiple times. Not only that, this is the level that we recently got the engulfing candle that broke through and shifted this particular market structure back into the low and then a new high, right? So that would be the sort of neckline, that would be the sort of level of structure that I would expect for us to retest before making a definitive move back to the upside or reclaiming that level and moving back lower. Also, something that I want to point out: this is a very strong rejection to not only 166 but also the 786 here as well. So I don't want to rule out the fact that once again, while we're rejecting here, we could potentially be seeing a higher low at 162. We could also be seeing again that reclaim of 162 and lower than that because of the way we rejected here. So I don't want to to take away from that point. Not only that, and the kind of bigger picture, the grand scheme of things, looking left, this is the high, right? All of this price action right here could still be like the new sort of like lower high, right? I don't want to take away from the fact that these long wick rejections to 166 are playing out as reversals back to the downside, right? Because it's very much possible, although we're starting to see price trend back upward, we could still very much reverse and have all this price action here act as a retracement for the larger move that happened going into 171. So I hope that made sense. I don't know if I'm confusing my futures. I wouldn't be confusing my futures because obviously I'm it's me. If anyone else is confused, I mean that's on you. But I feel like I'm making a lot of sense here. Once again, we have formed a new high here, looking left in the grand scheme of this sort of price action. Looking left here, this is a new high. I would expect a higher low. The level that makes the most sense to me is the 162 level. That's the level that we engulfed and broke out of previously. Also, sort of a trend line retest of this sort of descending wedge. Also, we also made the how many times can I say also? We also made this a very clean move and measured move from this wedge into 166, so that move is already played out. Once again, area of interest for me overall is 162. Whether or not I would short it whether or not I would short it back into 162 is something I'll cover as I get into lower time frames. But once again, I want to cover the overarching point that we've made a new high. The next thing we could expect is a higher low, and outside of that, obviously want to look at it from both scenarios. We could get the break and retest of 162 and see higher prices, or we could also consider the fact that we rejected twice. This could potentially be a double top. We rejected twice from the 166 level, also acting in confluence with the 786 here as well. Big wick rejections and reversals back lower. So two scenarios will play out: either again break and retest on 162, or they reclaim below 162 after this big wick rejection at 166 and the 786 here. Hope that made sense. Going into the 4 hour always makes a ton more sense, adds a bit more context here as well. This is looking disgusting. Let me fix the chart really quick. Okay. All right. So boom. Also, once again, this definitely adds a ton of conviction for the 162 break and retest play. Also, I mean, we have to look at it from both sides, right? Also adds a bit of conviction for the bearish reclaim here as well, and I'll get into that here shortly. Going into last week, right, or rather, coming off of last week, we did have an inverse head and shoulder start to play out very early into the week, and it started to break out towards like Wednesday, Thursday, if I'm not mistaken. The measured move for this inverse head and shoulders played out perfectly into the 165 sort of resistance, our level of resistance we rejected in the past. Going into this coming week, right, when we have inverse head and shoulders, when we have big breakouts of these sort of patterns, what we typically expect, right, is a neckline retest before, or a reclaim, right? Price always reverts back to the mean, or more often than not, it reverts back to the mean and retests the level of structure that it broke out of. Where is that level of structure in, in the bigger picture of the inverse head and shoulders? And I'll tell you right now, it's at 162. 162 is the neckline for this particular pattern, and when I start to fib these levels out, we find that the local swing low to the swing high brings the 618 and lets it act in confluence with the 162 sort of area. So once again, looking at it from the perspective of like, okay, I looked at it on the daily, I am expecting downside as far as GJ is concerned, but I don't want to ignore the fact that we did just have a ton of momentum to the upside. Where could price potentially retrace and retest before moving higher? This is where it would be 162, acting in confluence with the 618, also a very respected daily structure, also the same level of structure that we broke out of initially from this wedge, right? Also could be a very it just makes the most sense to me, at least, with all these different pieces at play, for this to be the next higher low if that's what we're going to be making. So definitely tons of added context, a lot of confluence at play here. And so with that leaves me basically with three levels of interest for GJ, right? Either one, we get the microstructure retest and move lower from 164, or a reclaim and break and retest above. Or, we can come into 163 here as well. This is a well-defined level of structure. Looking left, we did range here quite a bit, and it did act as both support and resistance, so I don't want to rule that out. And then the last area of interest being the 162 sort of area, acting in confluence with the 618, and also being a neckline retest of this inverse head and shoulders breakout. So those are all levels that I would potentially position myself. I will say once again, especially after especially after mentioning I am bullish above 162, especially with the way the weekly is looking, I would consider buys on these breaks and retests. If we see a definitive retest on 162 with strength, I would buy that into 164, potentially higher than that. And I would also short the reclaims below these levels. If we get obviously a breakdown and a retest of 162, I would take that into the August 22 low. I would also consider, to be completely honest with you, I would consider the breakdown from 164, the retest of 162, and then the bounce back into 164. And if we get weakness there, very much like this arrow outlines, I would take sells here all day, every day. I would only be taking buys. I would only be taking buys above 164 on a break and retest, or on the break and retest above 162, where we initially broke out of. This is just a very well-defined level of structure. Anything below 162 is definitely shortable, and then obviously below that, the August 22 low is shortable as well. So I hope that made sense. Pretty straightforward as far as the arrows outlined. Literally, I'm taking breaks retest of 164 all day, every day. Into 166. Outside of that, I would take rejections and weakness below 164, break retest below 164. I would also consider the neckline retest, the buys at 162. Outside of that, if we break below and reclaim 162 overall, I'm only looking for sells. Just because we're extremely bearish below 162 overall, and we're pretty bearish below 164 as well. But the what's kind of reeling me into buys is the fact that we broke out of 162 initially, right? So with that in mind, if we did retest 162 on the button, it would make sense for us to bounce from there, which is the only reason why I would take buys from 162. So I hope that made sense. Once again, break retest of 164 all day, every day. Breakdown, I would take sells on the break and retest of 164. I would take buys on the break retest, or rather, not the break and retest, but I would take the buys on the retest and neckline retest of 162 in confluence with 618. Outside of that, breaks below 162 and retests are to be sold. Breaks retest below 159.44, the August 22 low, are to be sold. I hope that makes sense. Looking at it on the 1 hour. 1 hour adds a ton of context, I would say. Let's see. And so just going into where we ended the week off, right? I would not be surprised if we reclaim 163 or the 164 area for a short time to see a retracement. Obviously, we had a ton of momentum to the downside to end the week. And so just obviously swing high to swing low. The fib, rather the 618 does act in confluence with the last week candle low of this last year, December's last week candle low. Also a level of structure here. Looking left, definitely have a bit of liquidity here with all these wicks and everything else. So I would not be surprised once again to see a potential retracement into those levels. And honestly, I wouldn't short. I wouldn't short the retracement of the 618 here. I would want to see definitive weakness below 164 overall to get short. Because reclaims above 164 could just be bullish in that case, right? So that'll be my sort of plan, my sentiment towards it. There are also local levels, the 618 here as well. I could also take it down here for a more shallow retest. But overall, I want to be a bit more conservative in my fib here. So I'm trying to keeping it swing high to swing low. 164 sort of 85 area does look like again, when these levels line up, it's not by just coincidence. So I want to make sure that I'm respecting each and every level of structure. Overall, reclaims of 164 are bullish into these levels. So I mean, I'm not gonna sell if we reclaim 164. But once again, as far as where I'm wanting to position myself in the market, playing these levels level to level, I would take weakness below 164 all day, every day into 162. Obviously, I did mention as well that I would consider the 162 or 161 sort of 80 area retest buys. So everything into those levels I would be selling until we see that definitive strength above 162 or a retest above 162 with strength. Then outside of that 164, reclaims of 164 are bullish into fib retracement levels. I honestly would hold off on taking the fib retracements above 164 just because once again we are sort of bullish above 164 overall. So I hope that makes sense. That leads me into gold. So let's see. Oh, this is a position I took. We'll talk about that later. Where are we? Let's look at the weekly, or we'll start on the daily, or rather the monthly. Excuse me. Looking at the monthly for gold, right? This is again something that I wanted to outline when I was covering the dollar. Obviously, seeing that we might be expecting a retracement on the dollar, it makes a ton of sense for us to be at this level of resistance on gold, right? Literally, we can kind of call this a triple top, especially because the solid bodies are below this level of resistance, also acting in confluence with the 786. This is a very big level of resistance for gold. Not only that, when we look at it on the weekly, also literally same exact sentiment, very big level of resistance here that we're rejecting from. Most recent weekly candle close, although it did wick to the downside, it is still a bearish candle. Like I don't want to discount the fact that we are still moving to the downside, regardless of how much of a wick rejection we could call this, right? Once again, as I mentioned when I was covering the dollar, I am expecting a retracement on the dollar, and of course that would kind of act in confluence with temporary gold downside. And so even if we were to remain bullish here, right, I would need to see the trend line retest and obviously this liquidity zone retest with strength as well. So I mean, getting as low as 1905, I'm still pretty much bullish and wanting to position in the market for buys. But unless we, obviously if we break that, I'll probably be wanting to sit on my hands just from a weekly perspective. Looking at it on the daily, I did make a very interesting observation, as we can see. When we get these big pushes, once again, as I mentioned on GJ, when we get these big pushes with momentum to the upside, it's only right that we correct some of the move. And we did see that moving, or rather looking back in January, right? We got this big push, 11% push, this 2,000 pip move to the upside into 1960. And we got a small sort of bout of consolidation as we hit resistance, and then a retracement lower to make a higher low. Obviously, after that point, we did make that double bottom here and then push with a ton more momentum back to the upside. But again, these things happen, right? Like we get big pushes to the upside with momentum. It's only right that we see a retracement and reversion back to the mean, because that's just what healthy markets do. I don't make the rules. It's just what it is. And something that I found that was interesting is this big push was about 2,000 pips and 11% gain. And then outside of that, the retracement was about a 786, 7.8% retracement, which is, the 786, excuse me. And then that big push thereafter was another 11% push. And then if we were to say, where would that be? I think that's what a 7% push back down would be, literally into the 786, right? And so that adds a ton of conviction for obviously downside on gold, which I mean I'm not super excited about, but I can't ignore the fact that obviously looking left, we are starting to see a pattern, and history does tend to repeat itself. This was a higher high in relation to local structure. We got the breakdown and retracement before making a move higher. This is also another higher high in relation to local structure. So I would expect to see some sort of downside. As far as where I'm looking for areas of interest and everything else, there are a couple. The first being the 1905 sort of area into, obviously into this level of support, excuse me. Outside of that, we also have the 618 confluence with the 1860s and everything else. And so those would be the two main levels that I would want to consider buying from and positioning myself in. Obviously, again, 1925 sort of area, 1905 area, and then the 618 sort of 1860s and everything else. Obviously, if we get a break retest above 1959, I would take that all day, every day. If not, I'm pussy. But I don't think we're going to be seeing that this time around. Again, especially after looking left and seeing the pattern that's starting to take form here, I would not be expecting a break retest and higher from 1960. But although, I mean, that can happen, right? We could kind of call this, they call this like sort of a last kiss, right? Like if it does develop into that and continue to range and we get a break retest above the 2000s and everything else, I would consider that all day, every day. But once again, looking left, seeing the pattern, I am expecting a retrace into these different levels. Looking at it on the 4 hour, it does make a bit more sense. A couple different observations here to make. We are sort of squeezing, right? We got a double top here. We got a lower high, right? We got two highs, a lower high here, acting in confluence with the 618, a level of resistance here as well. But on the other side of that, we're squeezing. Once again, very familiar trend line that we're seeing here. We have a higher high, or rather higher low, another higher low, and then, obviously we're at the point where either we make another higher low or we break structure entirely. And it's starting to look like, in my personal opinion, obviously seeing the pattern that played out on the daily, in my personal opinion, we're going to be breaking the structure and moving back to the downside. Obviously, we have the lower high, the rejection from the 618 here as well. The only thing that would need to be done is obviously the break of this trend line and the break of this local structure at 1959 to continue to see downside, right? And that it's not going to take much to see that, right? I feel like there would be a ton more work to be put in to see further gold upside rather than downside at this point. So once again, I am expecting downside into this coming week for gold, especially if we start to reclaim levels below 1959. I think that would be the catalyst for gold sells, honestly. Not only would that be the breakdown from the daily and this sort of box that I have drawn out here, and this would also be the break of this sort of higher high and higher low structure that we're starting to see, and as well the break of this ascending channel, right? Like when we see again channels like this, either we get the ascending triangle squeeze and push to the upside, or we squeeze back to the downside, we start to sell off. And once again, the break of 1959, 1958 area would mark that for me. As far as where I would want to position myself in the market, if I'm getting into buys, right, I would need a break retest above 2000 area, which I don't think we're going to get. Outside of that, I'm going to be entertaining downside, right? I would entertain downside below 1956 all day, every day into the 1900s, as low as like 1865 sort of area, until we start to get bullish thereafter. Because once again, I would be wrong not to consider this potential downside on gold, at least in my opinion. So going into the 1 hour does make a bit more sense here as well. Obviously, as we can currently see, we are at the mercy of the range as it stands. We have a range between 1983 and 1959. We're calling the range mid here. This is also where we would be having to make the next higher low, with regard to what I was mentioning on the 4 hour here as well. So this is a very pivotal point on the chart. Not only because we have to make a higher low here if we want to remain bullish, but we're also at a sort of a level of support here, right? We've found this level of support and resistance multiple times, and so it is still a respected level of structure until it breaks up or down from this particular level. With that, I do not want to catch myself positioning in the middle of the range. It's just, in my experience, it's not the best thing to do. I want to take action at the extremes, the range high or the range low. So once again, as the market opens up into this coming week, I'm going to want to see where price ends up, whether we get a push to the upside, the bouncer break, or rather the break and retest above 1983 and into 2000, or the break of the bouncer break level around 1959 and a move back into the 1930s and everything else. I would take buys or sells to either direction based on where price ends up, moving into. But that's just my overall plan. Just again, because we are at the mercy of the range. I would consider buys on the range low here. But I would need high time frame confluence as well. I would need a wick like this at 1959 to consider buys there. Otherwise, I would be sitting on my hands and waiting for a break in either direction. So I'm pretty much done, right? I hope that made sense. Like, future me, I feel like it's pretty straightforward, nothing super crazy. Once again, as far as gold is concerned, we are at the mercy of the range. This is a very well defined and very good looking range here, I might add. But with that, I don't want to position in the middle of the range, and so with that, I'll wait for a break retest of 1983 or rejection, right? I would consider the rejection there as well, or potentially buying the bouncer break level at 1959. If we get a clear, definitive break retest below that, I would consider sells there as well. Going into GJ, just to sum it up, excuse me. A couple different things going on. Obviously, I'm bullish above 164, so I would not take sells above 164, although we do have the 618 here. I would take breaks retest above 164 all day every day. I would take breaks retest below 164 all day every day as well. I would also take breaks retest below 162.50 into 162. And it's not until we tad 162 that I would consider getting bullish. Or obviously outside of the 164 break retest and everything else, just because that is the level that we broke out of previously, and that is the most likely level that we're going to be retesting before making a move higher, in my opinion. So I hope that makes sense. Once again, areas of interest at our 164 for our break retest to the upside or a break retest to the downside. 162 sort of 50 area for breaks retest to the downside, and then 162 for retest and then bounces to the upside. I would also consider reclaims below 162, like breaks retest below 162 and lower than that. So I hope that makes sense. Pretty straightforward, nothing super crazy, as with every week. Try to keep it simple, and I hope that makes sense. Future me, I hope you're doing your thing, bro. God bless you, love you lots. Hope you're living your life to your utmost potential, excuse me. Just doing your thing. And so with that, God bless you, bro. Love you. God bless everybody watching, and take care.